Well, good afternoon, financial professionals. My name is Jennifer Nadeau, Case Design Specialist here at E4 Insurance Services, welcoming you to The Brew, building relationships every week. For those of you who are tuning in to The Brew for the first time today, welcome. We like to kick off the Brewcast by celebrating what today's National Day is. And today, it's more of a what happened in December or what happened on this day in history. So in the month of December, a patent was approved in 1948 for the game of Scrabble, just in time for Christmas. Also, in 1869, chewing gum was patented. And on this day in history, in 1911, 5 Norwegian Arctic explorers had a race against the English to be the first humans to reach the South Pole. So I thought that was interesting for everyone today. On today's Brew, we welcome E4 Insurance Services' very own Vice President of Institutional Accounts, Steve Walker. Today, Steve will share with attendees how to plan efficiently for out-of-pocket spending, on healthcare costs in retirement. As always, feel free to use the chat box to share your thoughts or ask questions, and all attendees will be in a drawing for a prize, and we will be announcing the winner at the end. Thank you for tuning in today. And Steve, hello. Happy holidays from The Brew.
Happy holidays. Glad to be with you again, Jennifer.
Always happy to have you. We are definitely in the depths of the holiday season, and in the world of financial professionals or services, when we think of the colder months, I know that it's not just the holidays we think about, but it is also Medicare season. And with Medicare open enrollment closing just a week ago, this is most likely on the tops of everyone's minds or people's minds. And I understand that you'll be talking with us today about how enrolling in Medicare isn't necessarily free and what we can do about it.
Absolutely. I am excited for this topic. And like you mentioned, I know the annual enrollment period just ended a week ago. Today was the last day. And I know we've got some great advisors on live, as well as that'll watch a recording that are breathing a sigh of relief. Others that are still working through some healthcare on the renewal side for January 1. So definitely a timely topic, and excited to go through some options as we go.
I think we see one of our attendees applauding that it's the end of Medicare season. Okay, so as far as what's going on, why Medicare isn't necessarily free, what we can do about it, I know that you have a solution of how we can potentially remedy that. So why don't we get into that now?
That sounds great. Well, before, I do have a one-pager that our awesome marketing team here at E4 put together a little while back. That I'll share my screen here in a little bit with that. And it's something we'll make available. And if you need it, reach out to me or any of the other great contacts that you have throughout E4 as we go through it. But yeah, as you mentioned, Jennifer, obviously Medicare is a big topic. And whether you're an advisor that sells Medicare or not, you definitely have clients that are impacted by it and can plan for it. So as we go through and we talk about this topic, whether or not you sell Medicare plans is really irrelevant. Certainly we want to make sure we're looking out for our clients. But when it comes to Medicare planning, not everybody is fully aware. And again, I know there's others on this call that'll listen that know more about Medicare than I do. But really, when you look and think about it, there's multiple parts of Medicare. Part A is going to be a free benefit. Part B is something that a lot of people will pay for, and depending on income levels, you may pay more. There's supplements, there's advantage plans, there's drug plans. I'm not going to go into the details because again, some that just got done AEP are probably wanting to get away from it a little bit. But even beyond those costs of the insurance itself, there's still co-insurance, there's co-pays, things that aren't covered by insurance. So there's a lot of what we call oops or out-of-pocket spending that we'll talk about today.
Excellent.
So
Go ahead.
Yeah, so I'm going to actually just share my screen here. And again, this is a clever marketing piece. I'd love to take credit for it, but our illustrious John Florence put this together, and he's a lot more creative than myself. So I applaud John for doing this. But as we look through this, this is just a thought piece for all of our advisors to be able to utilize. And really at the top, it talks about these out-of-pocket spending. And Fidelity Investments, they do a study that talks about what are those expected out-of-pocket spendings for healthcare costs in retirement. So as it shows here, what their study shows is a 65-year-old couple signing up for Medicare in 2022 can expect to pay out $315,000 in Medicare premiums, co-insurance, co-pays, and other costs over a 25-year retirement. So again, you think of, a 65-year-old living to age 90. That's a lot of money that is, again, nobody knows what's going to happen. But again, we can plan accordingly, in the statistics that we do. So when it comes to a plan, and the advisors that I work with, probably heard me say this a number of times, insurance and annuities, that's not somebody's plan. But the products that we offer and are able to help can help fund their plans. So again, being efficient with, if I know most likely I'm going to have this $315,000 expense throughout my golden years of retirement, is there a more efficient way that I could do that? Now, when we look and we scroll down here again, when we talk about what is that solution, and before we really dive into that solution, again, what's that goal? You may have a client that really wants to say, I understand I'm going to have this expense of $315,000. I want to plan for that. Anybody in the industry, if you've heard the name Tom Hegna, he's a great author within the financial services industry, and he wrote a book called Paychecks and Playchecks. Really talks about guaranteeing your income in retirement for those expenses you're going to have. And again, not only are we talking about living, eating, everyday bills, but again, healthcare expenses are going to be one of those expenses you're going to have. So if we can plan accordingly, we can guarantee those dollar amounts, not necessarily covering 100% of the care. I'm not talking about that. But if we average it out, that $315,000 over a 25-year retirement, again, $12,600 per year. So what are the solutions that you as advisors can bring to your clients? Right now, the annuity market, as you've heard many of us at E4 talk about, is hotter than it's been in the last 20 years. And utilizing a fixed annuity with a guaranteed lifetime withdrawal benefit, you can actually, quote unquote, get a discount on those healthcare expenses. So as we look at this chart, we're planning for a 65-year-old, I need $12,600 per year. And again, if we've got somebody that's planning ahead, maybe 5-10 years prior to retirement, we know that $315,000 number, that's going to grow over time, just as everything else does. So we've projected that out, with inflation, if we're working with a 61-year-old, a 58-year-old, whatever that might be, and what that annual oops would look like. So for those clients that want to plan ahead, hey, I want to have that $12,600 available year in, year out. You need more, I might need less in any given time, but I can plan for that. Rather than paying $315,000 over the course of their life, if they are on the averages, by utilizing these annuity solutions that you as advisors have access to through us here at E4, they can get a, again, quote unquote, discount. There's a lot of regulation with Medicare, so you've got to be careful. This is just conceptually. if they've got little under $194,000 that they could set aside to comfortably essentially buy that income of $12,600 per year, that's a $121,000 savings, or at a, again, thinking of it as a discount, a 38% discount on their money for expenses that they know they're going to have. Now, is this for everybody? No. Not every family wants to or has the ability and the luxury to carve out $194,000. But for those, again, think high net worth, or even conservative investors at the same point, maybe they want to just plan for that accordingly. But think of those high net worth individuals; they don't get to a large net worth by paying full retail cost when wholesale is available. So again, conceptually, you can think, again, the earlier you start, the bigger discount you get, because the annuity has time to, again, think of the cooking chili in a crock pot recipe. The longer you can let that simmer, the more juice, the more flavor you're going to have, so you get a bigger discount planning earlier on.
Absolutely. Excellent, Steve. Thank you for going through that. And as you were talking, I was just thinking about, not only are we in the business of growing wealth and growing assets, it's a protection play too. It's a protecting people's assets as well. So they're not dwindled down by these out-of-pocket costs that may or may not have been planned for. You mentioned that this isn't just for, we'll say, the mass affluent. Thinking about advisors, and yes, we just end Medicare open enrollment. There are other folks that we can think about, though, when we're looking through our books of business as far as who to target for that. Do you have any suggestions on that?
Yeah, no, absolutely. I mean, again, somebody that's, thinking back a few weeks when Shane Van Patten talked about long-term care planning. And if you haven't listened to that, Brew, it's fantastic. A great way that we here at E4 really take a look at long-term care planning. But he talks about the retirement red zone, and that's a phrase that I really enjoy. As you get closer and closer to retirement, and where this is now becoming a reality, you as the advisor can look at those clients. Your clients best. Who's got those assets that they could set this aside. Who's more of the risk averse that say, hey, maybe I don't have the massive amount of money that other people may have, but I want to lock these costs in. If I can get a 38% discount, know that I've got $12,600 that I can earmark for healthcare costs. And if I don't need it for that, I can either save it or I can enjoy it, whatever I want to do. Those conservative folks and those high net worth people and those getting close to that retirement age would be a great target. And again, I know those advisors that work with Medicare on a regular basis, you have to be very careful from a compliance standpoint of what products and topics you're talking about during that Medicare meeting. So again, you want to be certainly compliant and do things the right way. However, you can do this before AEP. You can do it after AEP. It doesn't have to be specific to Medicare. It just, again, ties in conceptually with a great timing there.
Yeah, absolutely. Again, thank you for that. And thanks for the reminder too about being compliant, so to speak, in our conversations and mindful of that. And as the wise words of Benjamin Franklin, I think the quote is, failing to plan is planning to fail. This necessarily isn't a failure, but definitely spending a whole lot of money that we may not need to. Any closing comments before we open it up for questions?
Really the only thing that I really wanted to just talk about is a saying that I think Dan Peterson here at E4 was the first person I heard say this, and I couldn't agree more. Insurance is not your plan. In this case, annuities is not somebody's plan, but again, it can help fund that plan. So if, as advisors, we can focus on those important goals, keeping the clients front and center in any decision that we're making, Ultimately, we're not selling them a product. We're offering them a solution to either hit a goal, mitigate a concern, transfer risk, depending on how that conversation is going. But again, this is just another way you can, as an advisor, add value to your client situation. They may love it, they may not like it, and they may know others that would be a great fit. So again, reach out. Feel free to reach out to me. Reach out to your RVP at E4 that you work with. If it's somebody other than myself or anyone on our team, we are more than happy to help you.
100%. Thanks, Steve. While we're waiting to see if there's any final questions, and please use the chat box if you have any comments or questions, I'd like to remind you that today's brew and our full library are recorded and shared on the Brew blog on our website at www.e4.insurance. And Steve, let's do our drawing as well. If you could please pick a number between 1 and 16.
I will go with today's the 14th. Let's go with 14.
All right, number 14, Jason Christensen. Jason, you are our winner today. Congratulations. Be on the lookout for a complimentary CE voucher and Starbucks gift card that will be coming your way from all of us here at E4 Insurance Services. Congratulations, Jason. And I'm looking to see if there are any questions in the chat box. Also, feel free to unmute your line too if you'd like to say something.
Yeah, congrats, Jason. And again, thank you everybody for listening in. And for those that couldn't join live but are listening after the fact, hopefully you found it valuable information.
Absolutely. And I am not seeing any questions, so we'll wrap it up. I'd like to remind everyone that this is our last brew of 2022 so that you, our advisors, and the team, we can all focus on year-end business. All of us at E4 want to extend our deepest appreciation to our speakers, to our advisors, for joining our weekly brew this past year. Wishing all of you a very Merry Christmas and a Happy New Year. And we will see you next year back on the brew. Merry Christmas, everyone. Talk to you soon.